Hello, I'm Frank Holland. Welcome to CNBC.com. We are talking the current ETF market, which year to date has net inflows of $1.09 trillion, very close to last year's record of $1.12 trillion. And to discuss ETFs and also get an ETF pick, I'm joined by Jay Hatfield, the CEO of Infrastructure Capital Partners. You're also the CIO, Jay. Thanks for joining us.
Thanks, Frank. Great to be on.
All right, ETF inflows topping $1 trillion again for the second straight year. What do you think that says about investors that they're looking at this financial instrument as a way to put their money to work?
Well, it's definitely a really attractive security for investors. They don't want to do the awkward trading of open-ended funds where you can only do market on close orders. They like to trade during the day. Obviously, a lot of traders on Robinhood and other venues, and also you get better tax characteristics. Usually the ETF manager can defer the capital gains so you don't get surprised by distributions at the end of the year. So definitely the instrument of choice, and even the established open-ended funds are continuing to migrate over to ETFs.
All right. Looking at some of the top inflows this week, the top inflow was actually a JP Morgan municipal bond ETF. What do you think that says about sentiment that a bond ETF saw the top inflows this week?
Well, obviously rates are coming down, but it's also indicative there really hasn't been any significant flows into high yield bonds or preferred stocks, which are lower credits. I think people are still nervous about the economy, nervous about the problems in the auto sector, but those two categories aren't really affected by autos. So munis are an investment grade fund, obviously tax advantaged. So we think investors should start to look more at the higher risk fixed income because they tend to do better when the stock market's strong.
Jay, you talk a lot about the Fed on CNBC. I want to get to your pick in light of the fact that we just saw a Fed cut yesterday. However, a lot of people see it as a hawkish cut, with Jay Powell saying a December cut is not a foregone conclusion. What's an ETF to play this current market?
We do think the Fed's going to keep cutting, even if it's in the next Fed chair doing it. There's still 100 basis points priced in. And we think that non-tech stocks will start to get flows as they are today when tech stocks are weak. And so a large cap dividend fund like ICAP that we run is attractive. We also think it's fantastic to write individual short-term calls where the stock is close to our target and where we have a gain, rather than writing index calls, which a lot of funds do on the call writing side. So we think it's a superior strategy that's going to be well positioned when the Fed's cutting rates.
I want to go back to the ICAP. When someone buys the ICAP ETF, what are they investing
in? So you're getting a portfolio of about 70 large cap dividend stocks, high quality stocks. The average market cap's over 100 billion. So these are stocks that are quite resilient, good long-term holdings, and have substantial dividends. So we're not just writing calls like some funds, but we do enhance the income by writing a smaller amount of dividends. And by writing a smaller amount of dividends, you can participate in up rallies. And if you look at the major funds that do index call writing on the whole portfolio, they tend to underperform in up markets.
All right, Jay Hatfield from Infrastructure Capital Partners. Appreciate that pick and appreciate your insight on the current ETF market. You have a great day. Thank all of you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. I'll see you soon.